How can partnerships support education funding strategies? In recent days, the conversation around education funding has gained momentum. The question on many minds is, how can partnerships support education funding strategies? With ongoing discussions about budget cuts and resource allocation, people are eager for solutions. Partnerships, especially those involving private equity and investment firms, play a significant role in this area. These collaborations can provide substantial capital that helps schools expand, innovate, and improve their infrastructure. Private equity investments are increasingly targeting educational institutions, including schools and specialized education providers. This focus aims to enhance operational efficiency and scale successful educational models. For instance, private equity-backed education companies have successfully scaled academies, which can lead to improved student outcomes. This approach allows for better management practices and more sustainable funding models. Partnerships with private equity firms bring financial resources that public funding often cannot cover. These collaborations can finance new school facilities, technology upgrades, teacher training, and curriculum development. Recent examples show how these investments have led to better educational offerings and increased access for students. However, these partnerships come with challenges. The profit motives of private equity investors can influence how funds are allocated and managed. This raises important questions about whether the focus remains on educational quality and equity or shifts toward financial performance. In addition to private equity, partnerships can also involve public entities and philanthropic organizations. These multi-sector collaborations can diversify funding sources and reduce reliance on government budgets. Innovative financing mechanisms, such as impact investing and social bonds, are gaining traction. These tools are designed specifically for education projects and can introduce fresh funding avenues. It is essential to consider the criticisms surrounding some funding strategies. For example, voucher programs have faced scrutiny for diverting public funds from traditional public schools. Critics argue that this can undermine overall education quality and equity. Partnerships involving private equity and other investors can indeed support education funding. They inject capital, scale successful models, and introduce new financial tools. However, maintaining a focus on educational outcomes is vital to ensure these investments benefit students and communities effectively. As discussions continue, the role of partnerships in education funding remains a hot topic.